Welcome, everyone. I'm Angelo Robles to the Angelo Robles podcast. I'm also the founder and CEO at Family Office Association. To give you a little context behind the podcast, I look to distill best practices and best ideas of among the world's most successful investors, families, and their family offices. I hope to provide thought-provoking opinions and feature amazing thought leaders to our listeners of the podcast with an eye towards the future of successful investing, families, and their family offices. We have a special treat today to kind of pretty close to wrapping up our year, and it's been quite the year in 2020. We're titling it Marc Faber of Gloom, Boom, and Doom Report, highlighting unusual investment opportunities around the world and the biggest threat to the super rich. It features, per my title, of course, the one and only the real Dr. Doom himself, and that's Marc Faber, founder of, again, the Gloom, Boom, and Doom Report. You have to go to it. You have to sign up. It's incredible. I've really enjoyed Marc's work over the years. Let me give you a little bit of context in case you've been in a cave and you don't know who Marc is. He was born in Zurich, Switzerland, and obtained a PhD in economics at the University of Zurich between 1970 and 78. Marc worked for White Welding Company Limited in New York, Zurich, and Hong Kong. And from 78 to 1990 was managing director at Drexel Burnham Lambert. In 1990, he set up his own business. Marc Faber Limited acts as an investment advisor and fund manager. Marc publishes a widely read monthly investment newsletter, the Gloom, Boom, and Doom Report. Marc, welcome back to the show.
Well, thank you very much for having me. It's a pleasure.
Oh, it's always a pleasure. And joining us, I might add, all the way from Thailand. So a very different time zone. I'm not even going to ask him because he probably never sleeps anyway. Now, Marc, I've done so many interviews, especially lately, with a lot of global macro thinkers. And we're going to get to things like the Fed, AKA central banking, and all that. But I'm going to work a little backwards today because my audience really is very action oriented. So why don't we get to it? Smart money invest where asymmetric risks exist. Regardless of the reason, most people are sitting on the sidelines waiting for clarity. Their recency bias kicks in hard, and real investors, I think, and how many are real investors, know how to dive in. So a lot of my audience is looking for opportunities in asymmetrical returns. I would like to bring up commodities and things like uranium and rare earth, and I would love to hear your opinion.
Well, thank you for asking. As you know, the markets are very complex in the sense that some stocks can go up and other stocks can go down, and one market can go up and another market can go down. And then we have the currencies that we have to consider. This year, surprisingly to many people, the euro has gone up 8% against the US dollar. And we have even some Asian currencies that have been strong and so. So we have to take a lot of different factors into consideration. And concerning commodities, you can imagine that the price of coffee or cocoa or sugar has very little to do with the price of copper and nickel. They're totally different markets. So when we look at commodities, we have to distinguish what kind of commodities. And as we've seen this year, some commodity markets have gone up a lot, significantly, and others are still down. So we have to kind of specify what are we talking about, specifically industrial commodities, in which case you're betting essentially on monetary inflation and on an economic recovery around the world, or you're looking at agricultural commodities, in which case you're betting on essentially some shortages occurring in the one or the other commodity. But I suppose you're asking about commodities in a wider sense, because they move in concert, some more than others and so forth. In my opinion, as I said, there are markets that go up and there are markets that go down. Commodities have been in a bear market essentially since 2008, so 12 years bear market. They are compared to equities, to stocks around the world, extremely low. With some exceptions, you know, gold and silver, they have kind of held up with equities, but other commodities have become very low, and some have rebounded. And in my view, some, like coal, oil, and probably uranium, they've made longer term generation lows. I mean, I don't think that oil will go back to the April lows when we were in the futures market. We were actually negative. I never knew that you could go to negative prices in the futures market. This was also for me a new learning experience. But this happened. But I think that sentiment about oil and other fossil fuels has or did become too negative. And I think that we are in a long-term bull market again for oil.
Interesting.
So that is a play I would encourage family offices to consider, not being long Zoom and Amazon, but being long oil.
Yes, when we get to equities, we'll talk about the FANG plus Microsoft tech stocks possibly driving what some people argue good deflation. So lots to unpack, but we're still in commodities because you're, arguably the world's leading authority and have a tremendous track record. So oil, you're putting it potentially being bullish relative to its current price. How would you recommend larger scale investors like family offices access or invest in that commodity? A futures, ETF, direct investments, how so?
I would buy oil companies, whether it's Marathon Oil or Occidental Petroleum or BP in Britain or Royal Dutch or Total, or even maybe some Chinese oil companies. I think I would buy oil. That's what I do. And I manage essentially some money.
Interesting.
You can, of course, leverage the whole thing by going into futures. But I want to explain here something that I think is important to understand. With futures, there is always a rollover cost. Occasionally, you can roll over at a discount, and then it's relatively attractive, but normally there's some cost in rolling over your commodities positions. And so you miss out unless the price of a commodity goes up substantially. Therefore, I prefer, if I want to own, say, or a play on grains, I prefer to own plantation companies or grain trader like Bunge and so forth. So there are alternatives to going into futures, and I think they are more attractive than the futures market for non-professionals.
Yes, and that's a good point about oil in terms of looking at it from some of the public stocks that are out there, incredibly liquid. And could be a very viable opportunity. Now, I started off a little out of what we would say here in the US out of left field, talking about something like rare earth. I'm not even sure if there's an ETF and really how much that ETF really tracks it. Is it mainly the miners? Is it mainly China? Is that something you're familiar with?
Well, I try to keep this relatively simple, and I have positions in physical silver, gold, and platinum. And then I own some share positions in these, in stocks that reflect these three precious metals. And otherwise, I don't dabble so much in commodities. I was looking the other day at uranium stocks because they seem to have made long-term lows, and but I didn't buy. But what I bought not long ago are some fertilizer companies, because obviously if agricultural commodity prices go up, as I believe they will, then fertilizer companies will benefit.
For sure.
But my main position here in the commodity sector is oil.
Yes, no, that was wonderful insight. And we're going to kind of put a bow on commodities relatively shortly, but there's two that I'm leaving on the table that we have to cover. You noted one of them a little while ago. Do you think that gold that you're very, no, we're going to get to gold. I'm sorry. Silver you're very bullish on at the moment?
I'm seldom very bullish about something because there's so many different factors. But I think that silver became extremely inexpensive compared to gold about 3 months ago. Since then, silver has outperformed. And we went up strongly also in silver shares. And then for the last 2-3 months, we've been kind of correcting. And I believe that we are reaching a point where from here onwards, silver and also gold will kind of bottom out and rise again.
Before I get to my next question relative to that, we do have a question from a live family office participant. Curious to know why Marc chose to pass on uranium in spite of coming off its long-term lows. Do you have any specific buy or sell or neutral recommendations relative to uranium?
I wanted to buy it, and then there was a jump in these uranium stocks.
Yes.
And I will buy on a correction.
Yes.
But it's an omission on my part. There was no reason why I didn't do it. I often hesitate to do something, and sometimes I regret not having done or bought or sold something. But very often I don't regret it at all because it doesn't work out. So, you know, both ways.
Now, I've heard you say, and maybe it's adapted lately or during COVID, and we're going to get to gold in a second, but commodities all inclusive, you think families should have as much as about a quarter of their allocation towards commodities. Do you still feel that way?
Yes, including gold, silver, platinum.
Yes. And
yes, I feel that way. And of course, maybe you'll talk about this later on, but I think in the current environment we have with the current size of monetary growth and expansion, I think that cryptocurrencies make some sense.
Oh, trust me, Marc, my audience is probably chuckling. We will absolutely get to that. I'm saving that as kind of the sweetener at the end. But I do have to turn my attention to something that people often lump in with Bitcoin that you just mentioned, and probably the gold people get a little mad, but they're coming around a little bit, and that is going to be gold. I'm going to read a couple of quotes, which maybe is taken out of context because I'm not reading the full thing, but I believe I have it here that Marc urges Americans in particular to own physical gold rather than gold certificates or related banking instruments. It goes on to say, and I'm just quoting certain parts, nothing can beat actual hard assets like gold. It also goes on to state, gold clearly fits the bill because it's an irreplaceable means of exchange in terms of holding value. I'd love to hear your opinion about gold and physical ownership of gold.
Yes, this is again complex because there are some disadvantages in owning gold and silver. Let's say you're calling me from the US now, and you are in the US, and your gold is somewhere in a bank or overseas, or it is in the US and you travel overseas, I can tell you that knowing how pleasant US immigration and custom officials are, that you're not going to get very far with 10 kilos of gold in your handbag.
And that would apply to any country. And that happened in Venezuela recently with wealthy or even the unwealthy that had a little bit of gold, that they are checked so significantly in leaving the country. And let's face it, that gold is confiscated. Yeah, that's
yes, I believe that.
Big problem.
So one consideration, and you ask me, what should actually we be worried about? I think one consideration we have to think about is how and where do you hold your assets? I mean, I can tell you, when the Russian Revolution happened, the October Revolution in 1917, some Russians, they had money outside Russia. And they could flee Russia or go somewhere else and immediately start. Others didn't have any money at all. And I've seen it with my own eyes in Hong Kong, when in 1949, China, or the communists took over China, some Shanghainese had already left. Others were leaving right after the communist takeover. Some, they had money outside the country. In fact, some of the richest families in Asia, they came from that time, but they had money outside China. So they had a head start. And others, I had a very good friend. He was working for one of the richest Hong Kong Chinese. And this very wealthy Hong Kong Chinese, he told me, Mark, my assistant, his family was much richer than we were in Shanghai. But they had all their money in Shanghai and nothing overseas. So he ended up working as an assistant to another wealthy Chinese that he knew. But this is how life works. It's like the Jews that had to leave Europe or wanted to leave Europe or wanted to leave Germany, that went overseas. Some arrived with some money and others, they didn't arrive with any money. The ones with some money, they had a head start. It was easier for them to start a new business than the ones that didn't have anything at all.
Absolutely. So I probably have lots of questions on this.
So I want to say this, if you're an American family office, and I'm not suggesting that you do anything illegal because, as you know, the State Department and all these agencies are not particularly friendly, but there are legal ways where you can hold assets overseas. Say you're allowed to buy a property outside the US. It's totally legal. And you then have to, of course, consult with a lawyer or a tax consultant how to best structure it. That I cannot. I'm an economist and I'm an investment advisor. But I can tell you, personally, the bulk of my gold is in Switzerland, but I have enough gold for the next 10 years, if I need it, here in Thailand, in a safe deposit box. And some I have here somewhere. I am not going to tell you who your listeners were.
I'll be coming to visit you in Thailand, Mark.
Is somewhere in one of my drawers.
Okay, so let's talk a little bit about that from a family office perspective. Now, if they're in it for simply the asset play, we could argue futures, ETFs, mining company stocks. But if they're looking at it as a store of value, would you recommend they arguably have some coins safely stashed away in their home, but larger physical gold where you own the bars? I would look at Switzerland. I would look at maybe Singapore. And would you keep it in the banking system or would you keep it in a Brinks out of the banking system?
You can keep it out of the banking system, but I want to I don't want to destroy the illusion, but I want to emphasize that if one day the world's governments, like 1933 in the US, decide that gold ownership is illegal, then it will be illegal whether you hold it in a bank or you hold it at Briggs. You understand? It will
Trust
be
me, I do.
declared illegal. And if you don't tender it back to the governments, which is not entirely unlikely, if you don't tender it back to the governments, they can declare you a criminal. And then, you know, in my position, do I want to go to jail for 10 years or do I have to dump the gold?
Yeah,
These
I
are
think that choice is
considerations.
probably pretty obvious.
I mean, I don't think it will happen in Asia because we are not yet in Asia at an advanced stage of socialism, communism, and woke society. We're a little bit behind, luckily.
Yeah, that sometimes could have its advantages. You bring up some interesting comments relative to gold. Cash doesn't appreciate unless it's held in a bank, but gold doesn't need a safe to appreciate. It can do so in the comfort of your own pocket. That was one of my favorite quotes that you had relative to gold, for sure. Now, this is a subject we could just spend really the full hour about because it's so great, and I'm glad to get your opinions on it, and it's been helpful. I will note that some of the institutional investors, which always usually are a little behind the times, especially ultra-conservative pension funds, and for them, it's more of an asset play, usually have well under 1% allocated to gold. Families usually have a little more, 2 to 3%. But like we discussed earlier, overall in a diversified basket of commodities, you would probably recommend a higher allocation. I would have wanted...
This is something I don't understand. When you talk about conservative pension funds, the fact that they can buy Portuguese bonds at the negative interest rate and not hesitate about doing it. Once they buy a global bond index, they have Portuguese bonds in it. They have Swiss franc bonds and so forth. All these bonds in Europe, they have negative interest rates. They can do that, but then they hesitate to put 10 or 20% into precious metals. Exactly. When it is quite obvious that the central banks have to continue to print money. They cannot stop. The whole system implodes if they stop printing money.
I completely agree. And I know I'm going a little backwards in this interview because I wanted to get to some of the investment recommendations, but we will circle back. And you have some amazing comments, in my opinion, on that. So simply stay tuned. You actually just hinted on it. Let's move on to kind of fixed income. I'm going to read another one of your quotes that I loved. A lot of people are wondering why someone would buy a bond with a negative yield. Say you buy a Swiss franc bond, you pay 105, and in 10 years, it will pay you back 100. So it has a negative interest rate. Why would I want to own that, Marc?
Well, actually, the Swiss franc bond, the zero coupon bond, 10-year bond, is selling at 110. In other words, you lose 1% per annum over 10 years. There are two reasons why you may consider buying them. One, you would make a bet that the US dollar becomes very weak. I think the US dollar is a doomed currency. I think it has a huge downside risk. I mean, it's almost an unlimited downside risk. This is my view about the US dollar. Just look at who is going to be at the Treasury Department under Mr. Biden. First, she became the money printer #1 in the world, relatively clueless about economics. but completely clueless about international currency movements. And she's at the Treasury. And Powell, presumably he will stay on. He's also a money printer, as we've seen. He started to print money long before COVID-19. He started to print money end of August 2019. There was not a trace of COVID at the time. Maybe it was in Mr. Fauci's lab. There was a trace there, who knows? But I mean, among ordinary people, there was no trace, but they started to print money because there was some liquidity issues in the repo market. Then, although I've studied all the big periods of inflation, the problem is once you embark on printing money, there's no way back unless you're willing to take huge pain, huge economic pain, particularly in asset markets. But once you embark on QE1, QE2, QE3, and so forth, you have to continue. And each time the dose into the system has to be increased, otherwise it's useless. It's like fiscal deficits. They have to keep on going up over time until the government owns everything.
So if the US dollar is going to lose its reserve currency status in the years to come, what are going to be some of the options? It's hard to imagine the euro, although like you said, relatively this year, not bad. The Chinese renminbi, we'll get to the IMF, but might they recommend SDRs, or might there be a basket of things like gold, silver, and arguably Bitcoin?
Yes, I mean, yesterday, Bloomberg published an article, and I was thinking actually that may be something for me as I get into the retirement age. They had an article about the value of pigeons, because you can raise pigeons, and so the bird. And so the champion is worth over $1 million US for one pigeon. My Chinese friends immediately send me a picture of a pigeon on a plate that you eat. So it's $1 million dish. You know, everything has been inflated. I have a book collection. Everything has gone up, you know, and it's not because of my genius. No, it's because of monetary inflation. Antique cars, so-called vintage cars, are up. Stocks are up. And so as a family office, what you have to do is essentially look at assets that have either had a correction. I just mentioned oil and oil shares and oil servicing companies and so forth. They had a huge correction already, or they've been in a bear market, or an other asset class that has had a huge correction are emerging markets. And say you take European markets, stock markets, the British market, the English stock market has never, ever been this depressed compared to the S&P. It's at the lowest level ever compared to the S&P. Then as a family office, you say to yourself, well, maybe I should take some money out of the US and put it in the London stock market.
I mean, I'm assuming if the dollar is going to weaken, and you look at some of the demographics and much more than that going on around the world, emerging markets seem like, after being horrific for many years, could be poised to be a tremendous market to invest in.
Yes, I think so. I mean, some are very inexpensive. The stock market of Uzbekistan is selling at maybe 4 or 5 times earnings. Iraq, the same. And these countries, they are developing quite nicely. Also, Indonesia has been very weak. I think it's kind of bottomed out. And it's a country with more than 200 million people. So there is a lot of potential. There's an e-commerce company going public in Indonesia. It will be worth around $10 billion. Wow. Started by a young Indonesian. You see, I believe we have a rotten mentality among young people in Western Europe and the US. I'm not saying everybody. They are very clever and hardworking young people. But I was looking recently at or studying the lives of, say, great musicians, whether it's a recent musician like Horowitz or Rubinstein or Mehudin, or a singer like Callas, or a composer, and so forth and so on. One feature they all have is they worked incredibly hard to get to the high position they had in their profession. Without incredible work, you don't get to the peak, say, to be the best pianist in the world or to be the best singer. It's not only talent, it's a lot of hard work. And I think our Western society has lost sight of hard work. And they also lost sight of the fact that if you're a Christian, you are born with some faculties or some talent or whatever it is, but it is your duty to manage what you received in a responsible way. And that responsible way is, you can have a lot of fun and this and that, but it is your duty to actually work very hard. And not to go and expect Social Security to pay for this and Social Security to pay for that. You want to be free in life, you have to be responsible, and you have to take responsibility for your freedom.
That's a great segue. And I suggest everyone sit down and get their popcorn, because that's an amazing segue. Talent, creativity, and hard work. What do you think of the academia running our central banks? I don't think that I don't think they cover those three things too well, but why don't I get your opinion? And I know what it is already, but I want my audience to hear it.
Last week, I attended a conference by cyberspace like today. And it was a conference about the crisis of 2007, 2008, how it happened and why some people saw it coming and why others didn't see it coming and this and that. And there was an ex-central banker there. It's actually a she. She was, I think, at the Banque de France or something like this. Anyway, she was going on, and then I said, you know, in my presentation, I said, I think the central bankers actually led to the crisis by pursuing these expansionary monetary policies. And in the words of Bernanke, that a housing boom would be desirable to lift economic activity in the US. In other words, they created deliberately a bubble. And I called the central bankers manipulators. Of course, the central banker, this lady, right away said, I wouldn't call us manipulators. We stabilize markets. I laughed out loud, because stabilized market is, first they cause a crash in markets, then they step in to stabilize it. But after the crash, you understand, first they cause a crash. It's like if you're driving a bus with 50 children in the bus and you drive over the Alps or over the Rocky Mountains and you drive off the road in a curve, The bus crashes, 48 children pass away. You're the driver at the door, you open the door and you save 1 or 2 children. And then you say, yeah, I'm a hero, I saved 2 children. That is the mentality of central bankers. And the worst part, and I repeat this, it's an insult to actually the public, except the public doesn't understand that, but it's an insult to the intelligence of average citizens or people, that they can sit there, cause an enormous amount of damage, and afterwards they rub their hands as if they saved the system. You understand? After the crisis in 2008, I went to Atlanta. And a friend of mine, he was involved in distressed real estate. I went to see some whole colonies of houses. They were not luxury houses. They were houses with 2 or 3 bedrooms and far away from the city center, and they cost maybe $30,000 to $80,000. But the families in these homes had been evicted. How do you think you feel if you have 2 children or 3 children and you're evicted from your house because you can't, because the mortgage is larger than what you have? You're underwater and you lost your job also. You understand the human tragedy of central banking. And I've just recently, this year, written a report again about the moral and social consequences of money printing. Because I have this book and I recommend it to everyone. It's called The Economics of Inflation, and by Bresciano Turoni. And he explains in this book exactly what happens amidst monetary inflation to wages, to stock prices, to the foreign exchange price, to gold, and so forth, and of course to the social fabric of a country. It's very important to understand. No money printing has ever been successful in the long run. What it produced, and this is very important for your family offices, it produced the penniless billionaires. These are billionaires in Argentine pesos or Vietnamese dong, where you're a billionaire with maybe $100,000. You understand? So, in my view, I have a very low opinion of central bankers, but I've met some ones that are actually intelligent. Larry Lindsay, he was at the Fed. He was actually the vice chairman, but he was kicked out because he had relatively hawkish views. Volcker was an excellent central banker. And by the way, to be fair, Greenspan, he understood very well what money printing would lead to. But he was operating under some constraints. And also, to be fair to him, at the end of the 1900s, 1997 to 2000, he actually increased interest rates. And he increased them again, starting August 2006 up to 2007. Sorry, 2004 to 2007, they went up from essentially 1% to 5.25%. Show me when the US Fed will again increase interest rates to 5%.
I don't think I'll be able to do that.
Yeah, probably it's not going to be in our lifetime. And that's why I'm suggesting that the dollar has a huge downside risk, because I don't think they can increase interest rates. Otherwise, the system collapses.
Well, I mean, let's talk a little bit deeper about it. And I'm going to, again, quote you. The Fed is privately owned. In this case, again, the Fed is the central bank of the US by banks. Each move they make is to benefit their owners, not the American people. You go on to state, this pandemic is a smokescreen designed to hide the greatest transfer of wealth ever. It's all planned. Just follow the money. When the government prints money out of thin air, it's called a stimulus package. When you print money, it's called counterfeit. When the government confiscates your money, it's called taxes. When the mob confiscates your money, it's called racketeering. You are a great writer. I don't know if I could have said that any better, and it may not even be worthy of a comment. I think that kind of says it all. Let me move into, because I know we have a little bit limited time and still a fair number of things to cover related to this, and you've written about this as well. We are inevitably heading to central bank digital currencies. Now, there's a beauty to it. There's an efficiency to it that you do have to tip your cap. And this is very, very different than Bitcoin, which is decentralized. This is the government centralizing a digital currency, their own, and they could still make more of it. It's not going to be limited like Bitcoin. But what I think a lot of people don't realize, they might be able to force different interest rates and on different constituencies and punish you if you don't. Now we're going a little extreme here. If you don't do this, you don't do that, you don't buy stocks, and tax you whenever they want. And like you written about, they might even just freeze up your money and you can't access it. I'm really concerned about this big brother aspect. Am I overstating it or am I right?
Well, in Switzerland, the banks, they have negative interest rates for some people. If you have a, say, $5,000 deposit, I think you don't get any interest at all. But if you have over $500,000, they have a negative interest rates. In other words, it is a negative, it is an expropriation.
Yes.
That we have to see very clearly. Number two, I mean, at least I grew up with that belief of the classical economists like Adam Smith. And I've also read all the socialists, including Marx and Engels and Lenin and so forth. My belief is, and this I think Milton Friedman explained relatively well, that the market is actually functioning very well, that the central planner is inevitably going to make worse decisions than a marketplace where you have the aggregate number of buyers and sellers every day. So there's an established price. Anyway, I think over the last 30, 40 years, we've moved more and more from a free economy or relatively free economy into a command economy. You know, it's a planning economy. Now, the problem with the planning economy is that it doesn't work. I've been already starting in the 60s to Eastern Europe, because I used to do ski racing, and at that time there were some ski races in Eastern Europe, in Poland and in Czechoslovakia. And then in '68, I went on a holiday to Czechoslovakia. The day I arrived, in the night time, the Russians invaded Czechoslovakia with the tanks. I had a car and I had my room next to the broadcasting building. So I got up in the morning, I had to ask the Russian tank commanders to move a little bit the tanks so I could drive my car out. And so, and then I went to Russia in 1980 and to China already before that. The one thing I can tell you, people who want socialism and the government to do more and so forth, they haven't seen the economic disasters that socialism and communism produced. I mean, the people, they lived almost starving. They had nothing. Everywhere where there was socialism. Vietnam is one of the boom countries. We built one of the first hotels that foreigners owned in 1993 on the beach it's called China Beach near Da Nang. And at the time when we started to build the hotel, the country was dirt poor. Once you have capitalism, what does it do? It gives people an incentive to do something, to work. And since then, the country has been booming. Not everything is perfect, but the worst, and that has to be clearly understood, the worst system is a system of a command economy. And socialism is a command economy.
That's absolutely for sure. Back a little bit to my question, which is programmable money, digital currencies by the central bank. I mean, it's coming, but the challenges that I brought up, again, greatly efficient. It has some beauty to it, but it is big brother. They'll know everything on their centralized blockchain that we do, charging different interest rates that you noted. And if the government doesn't like you, well, things could go really wrong.
Yes, so, they can switch off your card.
Yes, which,
by the way, some hacker can switch off the whole system. You understand? That is the problem that I perceive. I'm not worried about essentially having a prepaid card. That is something similar than what they plan to do. But the problem, if you have a cryptocurrency issued by the government, is you need the internet. It's like a credit card. When I travel, I always have enough cash so I can buy a first-class ticket home, because you never know. You check out of a hotel, then a dumb person behind the reception says, "Oh, sorry, the computer is down." What do you want to do? Leave the hotel? They call the police. They chase you to the airport, or wait there and you miss your airplane. So they are huge. There are many books that have been written about this, why certain civilizations like the Maya civilization went downhill, or the Khmer civilization and so forth. Usually civilizations that are complex are very vulnerable. You understand? If we have a civilization where your family offices and you and me, we each have a farm. We each grow our food. We each have a few animals and so forth. We each have access to water. We're not particularly vulnerable. But once you're in New York City and you need the food to be shipped from the countryside to the city and refrigerated and this and that, and so the life becomes much more complex. It has huge advantages, you understand? You cannot become prosperous if we all live, as I described, on a farm, and we each attend to our cows and to our potatoes, because there's no division of labor. But it's a relatively safe life.
You know, that's an excellent point that you bring up. I have two final questions. We are going to circle back to what we hinted at earlier, and that is Bitcoin. Unlike government programmable cryptocurrencies where they could make more, this is a decentralized network. I would say scarcity, self-sovereignty, and I'm going to read a definition. And to me, it's money, it's an asset class, and it's a store of value. But you could also say, related to the store of value, it's a non-counterparty insurance policy on the legacy of central banking, the more it becomes more valuable, the more dollars they print. What do you think about Bitcoin? And should families own some, and in larger amounts, very careful how it's custodied?
Yeah, I think the custody is a very important issue. But I have a reader, and 3 years ago, after Bitcoin, I think it was 2 years ago, in March 2018, Bitcoin had declined from around 19,000 to 3,000. And he called me up and said, Mark, you know, I want to write a report for you because I think that your clients should own some Bitcoins, not put all their money into Bitcoins, but say if they have a million, they can maybe put 10, 20, 30,000 or 50,000 in Bitcoins. If they lose it, okay. But he told me, I think there's a chance that Bitcoin can go up a lot because the more money central banks will print, it's like gold, you know, the more they print, the more it will go up.
So would you
I think
recommend?
people should own some Bitcoins. The custody is a little bit an issue. But as I hinted before, the huge advantage of Bitcoins is that you can leave the US and the custom official tells you, you have anything? You can say, no, I have nothing. You arrive anywhere in the world and you can get your Bitcoins.
Yes, I'll give a little sidebar.
There are, I have to point out, there are some gold companies where you can do the same. You can deposit your gold in Singapore, and you can take it out in Canada or vice versa.
That is true. And those are all options that people should be familiar with. A little bit of a sidebar. We've done incredibly deep research and dives into Bitcoin, cryptocurrency, decentralized finance. I have a 36-page white paper about the process of kind of how to get started and understanding purchasing custody. And custody is a major, major issue. And unfortunately, a little complicated. Understanding a paper wallet, seed phrases, a hard wallet, and true custody in what's called deep cold storage. And is it in the US? Is it out of the US? Is it in Switzerland? There aren't easy answers. And even my 36 pages is not enough, but it's a good primer. And we have much, much more resources coming up on this. This will be exclusive to my members, but for those on the Zoom today, reach out to me with a direct message, a DM, and we're expecting it to come out in a day or two, and I promise I will share it with you. I suppose my last question, Mark, and we hinted at it in our preamble before we got started, and it's in my title. What is the biggest threat to the super rich?
Well, I think obviously expropriation is a threat. That there's no question about it. And the expropriation can occur in different ways. It can occur with the government just taking over your company, or the government can first depress the price of your company and then buy it. You understand? There's many ways how the government can go about it. Say, if the stock market crashed, and assets and the Dow would be down to 10,000 or so, then the Fed could come in and they could essentially, as a central banker told me, stabilize the market by buying all these depressed stocks and essentially build up a controlling position. Now the Japanese government, I mean, through the central bank, they control half the ETFs in Japan. So we're moving into a direction where the government owns more and more, and it's evident in many countries, they are 50% of the economy, government spending.
Yeah, I mean, some of my comments and a lot of my listeners know my points of view, which will be eerily similar to yours on this. The biggest threat to the super rich is not often making little asset allocations that go wrong. They're already rich. They should have proper tax mitigation and wealth transfer planning in place. And at minimum, although it may be boring, a diversity of resources in their asset allocation and absolutely gold and Bitcoin. But when it comes to what's the biggest threat, it's the government. The government confiscates your money all the time. They do it to taxation. And then we have the issues that happens in other parts of the world. And I wouldn't be shocked if theoretically happens here. The things that you noted, how they could structure legal issues against you, how they could do civil forfeiture. In theory, don't think that around the world, governments don't jail and kill people. They do. They have the ultimate power, including the military. No matter how rich a family is, unless they're the ones in political power, they're nowhere near the power of a government. And having diversity around the world in real assets, real estate, art, along with some of the things I'm noting, theoretically will help. Start over funds, proper trust. And these are things that we consult and work with families on a very, very deep level for families that are concerned about these issues. I mean, these are real, they're legitimate. And I didn't even get into civil and social unrest. There's more haves than have-nots, the bifurcation of the rich, the book Leveling from 2017, how potentially heading to quote unquote civil war. There's always going to be more people that will vote on the side of the have-nots because more people are have-nots than have. So in theory, they're really going to be in political power, which at minimum could mean significant taxation, which is the so-called soft way of confiscating your assets. I will get off my high horse, Mark, but I think you're pretty much in agreement with me on that.
Yes, this is a threat. However, I have to say, I know people that had money and then they didn't have money, and the level of happiness didn't collapse in many cases.
They might have got happier.
They felt, relieved from the responsibility. And number two, I think that if I look, say, I arrived in Hong Kong in '73, and then I right away started to travel extensively. I mean, it's remarkable since '73 how many presidents the Philippines had. But basically, the families who were very rich in '73, they're still very rich now. That is the remarkable thing. You know, it hasn't changed that much. There are some newcomers, you know, all these people that made money with electronic businesses and e-commerce and so forth. But the big families that have their money, had their money in beer, in real estate, in telecommunication, in electricity, all these families still here.
And one family is sending in a question related to that. Any view on making large land purchases to address the issues you discuss?
Yes, I think that one of the issues is obviously your property rights. I mean, I don't know whether you know him, Bill Bonner. He writes for the Daily Reckoning, and he's an outstanding writer, and he's very humorous. He has this huge farm in Argentina, but it's remote from everywhere and in the middle of nowhere. And there's some locals, the gauchos, the local population, they claim that his land actually belongs to them, that it's not his, and so forth. So you have to kind of make sure that the land that you buy, that you obtain proper title. That is possible in Australia, New Zealand.
Because even if a government regime takes it from you, you could argue decades later, your heirs might be able to get the asset back or get compensated for it. It's debatable, but maybe.
I have a friend.
Yes, exactly. Well, Mark,
his grandfather, my friend is 80. incidentally, his family was reasonably close to Hitler. But his father and his uncle went to enlisted as soldiers. And the father, he was a simple soldier. He didn't have to, but he volunteered to go to Stalingrad. And he died in Stalingrad. The uncle was taken prisoner by the Russians and spent 6 years in a Russian prison camp. But he said, his uncle, that the prison camp wasn't that bad because the Russians had a high respect of officers, not of simple soldiers. Out of the prisoners of war that the Russians took, only about a third went back to Germany. The others all died in this gulag. Anyway, his grandfather was like a king in what was Germany at the time, but is now the Polish part. Because Kaiser Wilhelm had given him territories due to his services, I don't know in what war. And he was an aristocrat. They lost everything when it became Poland. And of course, they can't claim it back. They're not going to get it back.
Yeah, that may take hundreds of years, if at all. Marc, you've been incredibly generous with your time. For those that would like to learn more about the Gloom, Boom, and Doom report and other ways to be active with you, what's a website or how could they do so?
They can contact me or go to the website gloomboomdoom.com, all in one word, Gloom, Boom, Doom. But one thing I also want to say, and I always tell young people about it, they ask me, how do you become rich? I tell them this should not be an objective. You should have as an objective, how do I fulfill a profession to the best of my ability? And then if you do that, if God is kind to you, he will give you bonuses in the form of wealth. But the objective should not be wealth acquisition, should be life that is fulfilling you in many different ways, culturally, intellectually, and what most people completely overlook is the health. It's very important to have a healthy life, and to have a healthy life, it helps if you're reasonably happy and if you don't have all kind of worries. Of course, I'm not the best example of healthy life because I smoke and I drink.
Well, I guess it's worked pretty well for you so far. We didn't even get into that issue.
By the way, the best-selling beer in Thailand is Chang.
Apparently, I learned something new today, which I do every day, but especially from you.
Yes, and now this Chang, the owner, he has kind of a monopoly over whiskey, local whiskey in Thailand. They call it whiskey, but actually it's more like rum. But it's not bad, but he has kind of a monopoly. He's one of the richest people.
That's good for his business.
In Asia. And the company is called Thai Beverage. It's listed in Singapore.
Ah.
The other very rich Thai is the man who invented the mixture to produce, how do you say this, tiger, what is it called? Tiger bull or bull?
Red Bull?
The
Red Bull drink? Yeah.
Yes. He has the liquid, and he's a partner with the Austrian that built up the business internationally. Can you imagine? From producing, this is a kind of a stimulant in Thailand. The workers, they drink a small bottle like this in the morning. It stimulates them.
Like you think, I was just going to say, you think you would get the same effect from caffeine and coffee, but good for them creating entrepreneurial endeavors that make money, I guess you could say. Well, this has been fantastic. I very much look forward to the next time. Marc, you've been incredibly generous with your time and incredibly insightful. I highly encourage people to subscribe to Gloom.
Don't worry. Thank you. Very kind of you.
Well, thank you.